Anish Damania, Head of Institutional Equities with IDFC Securities, also joins us. Anish, good morning. Thank you for joining us. For the moment, you can't complain because market internals are looking strong. Momentum is intact and beta stocks are active. So what is your house advice? Ride the momentum or time to exercise some caution?
So, about 1.5 months ago, one of the things which I was saying is that a lot of investors were skewed towards the defensives and had huge overweight positions in IT, pharma, autos, etc., and had quite underweight positions in the other sectors. So, and given the fact that there could have been a chance where NDA government would have come in power, this kind of move, this kind of portfolio balance would have hurt. Given the last two situations when we saw when the results were declared, the markets were up 10%. So most of the investors have rebalanced their portfolios in the last 1.5 months, cut down on these defensives and IT and export-related sectors and moved to banks and capital goods to balance their portfolios out. So what we have seen is basically this portfolio rebalancing to bring it in line with where the market weights are. And go slightly overweight on maybe banks at this point of time. Having said this, banks still are away from their highs, and given the fact that we are still a few days before the election results are going to be announced, I don't expect this equilibrium to be disturbed. The only shift, whichever way, will happen after the election results. So at this point of time, investors are very well balanced in their portfolio. So a movement of the market either way is probably not going to hurt them now. So which is why we are seeing balance in the market. We are seeing markets sustaining at higher levels, and there have been inflows in the emerging markets, so which have got deployed to that extent. Therefore, the markets have moved up. So our view is that at this point of time, a balance needs to be kept in the portfolio. Though we will say that at higher levels, one should be exiting the capital goods and the banking space and create some cash positions.
Anish, hi, morning. What's your sense on Sesa Sterlite now that the Supreme Court has lifted the ban on mining in Goa? How beneficiary news is this, and how much more upside can you see in this stock?
So I was just going through what can happen, and what we sort of saw is that the Supreme Court has now come out and said that okay, this ban is lifted, and they have put certain conditions which people need to meet. So meeting those conditions will take some time, but the fact that they have lifted the ban itself is a very positive step. So over the next 6 months, we'll start seeing more activity, though in a very measured way on that front. We had seen that over the last 2 years, mining as a sector has suffered and has shown declines in output across the board. I think this is something as such bans keep on lifting over the next 6 to 12 months and activity starts happening, we'll start seeing growth coming back into the mining sector. Maybe not the kind of heady growth which we had seen from 2004-05 onwards till 2010, but we'll definitely see some growth coming up, and that will be positive for the IIP.
What's your take on absolute valuations for the Sensex? Even though Nifty and the Sensex, they both are sitting at a record high, some would argue that valuations for Indian markets are still not stretched. We are trading at 14-15 times, and 14-15 times is much lower than, in terms of historical average, it's a cheap P multiple.
So one needs to look at in contrast with the other markets. So typically we need to also look at the multiples in relation to the interest rate. So we have a government 10-year government yield at about 9%, and if we really take it that equities is a function of one by the bond market, then you have a 11 to 12 P in a slow growth environment. In a higher growth environment, you can give a better multiple. But having said that, we are yet to see the higher growth environment come through. One is not very certain about it. Still, it is still some time away. So I think in relation to where the interest rates are, it's not a cheap market.
Anish, what explains the move off late that we've seen in the PSU lot? And let's start off by discussing, of course, the PSU banks first, because just a while back, everyone was cribbing about asset quality, stick to privates. What has changed?
Sentiment. So here one is sentiment, and second thing is that a lot of people expect that you have basically seen the peak of the NPLs, and therefore asset quality deterioration from here looks less likely. It will stabilize here and probably improve as we go forward, on the expectation that things are going to improve as we go forward. So if that is the case, then PSU banks which are trading at 0.3 times, 0.4 times, 0.5 times or 0.6 times price to book have done well, and those people who were trading at 0.8, 0.9, the bigger PSU banks, they are moving up to 1.2 times. So this is what is happening, and a lot of it is, balancing our portfolio. You had a private sector doing extremely well in the banking space, and you had the public sector doing extremely badly in the banking space. So there has been some balancing even in this area too.
Anish, of late, however, the momentum action has really shifted into asset owners, companies which have a broken down balance sheet. Till about a year ago, markets were punishing stocks which had a broken balance sheet, but now those groups are making a comeback. Look at the price surge in a GMR, GVK, Lanco, HDIL. What explains the underlying momentum in some of these stocks?
So one is the fact that they were beaten down quite a lot, and second is there is hope that things will happen for them. A lot of these, the companies which have been at the forefront of asset sales are the ones which are doing better than those which are not. So those people who have sold their assets or who have started that process are the ones who have benefited from this beta shift. So to that extent, you will see Jaiprakash or a GVK and a GMR doing better than probably a Lanco or somebody. So where I come from is that look, there is an expectation that things will improve, and these are still the flagship companies in terms of the businesses which they are in, and they are big enough. So that's why market feels confident that at least there will be some momentum out here, if not more. And let's rebalance the stock price to a level which warrants such optimism. However, I would like to warn that it's still these companies have high debt. Still these companies have to show that they can generate that kind of EBITDA to service their debt. That is not yet seen, and if this visibility doesn't come in, let's say, the next 3 to 6 months, you will see these stocks going back to where they came from.
Okay, let's go back to SBI. And SBI yesterday crossed that important psychological mark of 2,000 rupees per share. Historically, SBI has struggled in the past. It closed yesterday at 2075. In fact, on Thursday itself, it closed above 2,000. Anish, State Bank of India has rallied from levels of about 1450 to levels of 2100. It is no longer trading at sub-book. It is almost trading at about 1.5 times book.
Yes.
Do you think low-hanging fruits in SBI have been plucked because the core concerns, which is high NPAs, slow credit growth, elevated bond yields, those concerns, irrespective of the new regime, will not go away?
That's true, and therefore what we have seen is that SBI has come down from a level of 3,500 to 1,400 or 1,300 at its low, and it has bounced back to about 2,000. So at these levels, it looks that market is fully valuing the kind of optimism at least for the next 1.5 to 2 years, which can possibly come about.
Anish, what about the mid-cap pharma space? Biocon, Aurobindo Pharma, all these names have been showing great momentum of late.
So what you have seen in Aurobindo is the earnings growth has been pretty strong, and so has been the case with Biocon. So if you look at Aurobindo, let's say 1.5 years ago, it had been beaten down quite a lot, and it's just regaining its lost ground. And it is moving up because its now earnings are showing that kind of momentum once again. So what we are seeing is regaining of lost ground and doing a little bit more. But in relation to, let's say, the entire pharma pack over the last, let's say, if you take 2 or 3 year view, then the Sun Pharmas of the world have done a lot better.
HDFC Bank's earnings are slated to come out today, but in the near term, does it seem like that more than the earnings, it is the FII limit which is a contagious issue for HDFC Bank?
So yes, in the near term, it will always be a pressure point because if FIs can't invest, then who will? And domestics are now preferring to, till now we were preferring to invest in public sector banks. So even the FIs tilt was towards public sector banks. So typically, if you were to look at it, then private sector bank. Those ones who have done very well, like the HDFC banks and NBFCs like HDFC, etc., have done very well, have now taken a back seat because they were kind of defenses, growth defenses, which people were invested in. So that to that extent, the liking or non-investment into those banks, those kind of stocks will continue for some more time, at least till the elections are over. So I'm expecting that this equilibrium in terms of growth defensives not being the darlings versus the cyclicals and the capital goods and other banks being the preferred bets will continue.
Anish, I'm going to ask you a tricky question. Now, technically, there is the Adani group of companies, Gujarat-based companies are looking extremely strong. But fundamentally, if a client walks up to you and if his query is really centered around Adani group companies, Gujarat-based stocks, what would you advise that client?
So till now, like we were advocating Adani Ports and Adani Enterprises as stocks to look at, primarily because Adani Ports is a strong business franchise, and Adani Enterprises was a combination of the investments plus their own businesses, which in valuation terms at lower levels it was looking extremely undervalued. So what has happened is that the undervaluations have got corrected. At this point of time, we are not saying that, okay, you should rush into these stocks at this point of time, because that gap has got corrected and now we need to see what happens next. Adani Ports, by no stretch of imagination, is cheap and therefore to that extent, I wouldn't say that one should be looking at that stock purely from a valuation perspective.